Welcome to the Glengad Investor. My name's Liam and I am an idiot. I know I'm an idiot and I've started this channel to prove that I am an idiot. So how am I going to prove that I am an idiot? Well, I am going to pick a portfolio of shares based primarily on the FTSE 350 and then compare that portfolio of shares against a Vanguard Lifestrategy 80% fund. So further clarification on my idiot statement here. Now, I know from all the research that's out there and even the bet that Warren Buffett had that more than likely, well, 99% of the time, the index tracker fund will outperform a portfolio of shares picked by an individual. But I want to prove that that's the point. I want to prove to people like me that all that time that you spend looking at fundamentals, looking at what could happen, spending your time looking at dividends, trying to put all these tracker information together that goes into picking a share and then having that portfolio of shares perform over the long period of time against the index tracker fund like the Vanguard Lifestrategy. So how am I going to prove that investing your money in an index tracker fund is better than doing all that analysis over a share and then creating a portfolio of individual shares? Well, I'm going to do this by playing something that I call a share bingo. So you may be thinking to yourself, what the heck is share bingo? Well, I'll pop my bingo card up on the screen here and we can talk through the 11 key fundamental trackers that I look for when I'm trying to decide if I would invest in that share or if I would like to know a little bit more about that share or not. So the first key one is, and these are in no particular order, just in how they're on the bingo card here, is the debt not greater than 3 times the profits? So I think that's very simple. The debt that the company currently holds, where is it and how does it represent to the profits? If it's greater than the 3 times the profit, I think they're a little bit exposed and therefore that's a down marker for me. The next one is the chart and a general upward trend over the last 3, 5, 10 years. So that again is an indicator to me of how the share performs or how the company has performed over the last short, medium and long term. If it's in a constant upward trend, therefore it's a good indicator that it may continue in that way. If it has lots of peaks and troughs, then it's not such attractive. So again, you like to see something that is in a general upward trend. In general, has the share price been rising over the last year? You know, this is an indicator of how it's doing its most recent performance. Again, if it's kind of stalled or if it's on a downward trend, maybe there's something to look at there. Now, obviously, I'm recording this in January 2021. So for the last 9 to 12 months, most shares generally are on an upward trend due to COVID. But, you know, if some shares aren't, why aren't they? So it's, again, a good indicator as to, it's another fundamental indicator that I look at as to how the share is performing. The next one, has it always made a profit in the last 10 years? So this is again very important. You know, is the company profitable? Are you sure that they're going to be making a profit? If they're making a loss, like how's that loss covered? So I personally like to invest and look at shares or companies that have a key profit making goal, and has it made a profit in the last 10 years? Gives me an indication of how they kind of perform and therefore project that hopefully in the next 10 years they will continue to make a profit every year. So another key indicator marker for me here is around the market capitalization, and this kind of gives me an idea of, is the share price cheap or is it overvalued or undervalued? And how I do this is I look at the market capitalization of the company and look at its last profits, and then if the market capitalization is less than 15 times the profits of the company, then I think it's a cheap share or it's undervalued, and again I would look at that. If it's more than 15 times, I think it's maybe a little bit overrated, and therefore maybe I would consider not investing in this. Another key one, and again this is all about, you know, growing your wealth and going forward, is does it pay a dividend, and has that dividend been does that dividend rise year on year? So again, looking at Warren Buffett or a number of those real good investors, reinvested dividends is probably your easiest way of accumulating wealth. So it's an important factor to consider when looking at shares. So the next one I look at is, does the company have a 10-year history in the stock market? This is important because it shows longevity, it shows that it performs, it shows that it's doing well, it shows that it's got staying power, sustainability, and it's not just going to fold away. So yeah, I look for history and long life, and something that is going to be around in the next 10 years. Another key indicator for me is that in the last 12 months, and particularly the last 12 months that has just gone, has any of the directors bought into the company? This shows that they believe in what they're doing, that they trust in what they're doing, they believe in the service or the product or whatever sector it's in, that what they're doing is the best that they can be doing. So this is an indicator to me that they believe what they're doing, so therefore that they're putting their wealth at risk. So I would be also willing to do that as well. The next one I look at, and I think this is a very important one, particularly if you're looking to protect yourself, if you're a little bit, a lot risk adverse, is sticking to shares that are on a full listing. So like I said at the top of the intro, looking at shares that are primarily in the FTSE 350, not the AIM market. So yeah, that's an important key factor for me as well. I want a share that is demonstrated its worth. The second to last key fundamental factor here is, and this is probably one of the most important, is, do I understand the business the company's in? Like I said, I'm an idiot. So if I can understand what they do, then I can understand where the profits are coming from. I can understand what the growth, how they can grow. I can understand where there may be challenges. So for me, it's understanding what they do in the sector that they're in. Because if I'm just taking a punt and I don't really understand how they're making their money, then how can I determine if the position is a risk? And the very last key indicator that I look at is the P over E, and I ideally want this to be less than 20, because that kind of indicates that the share is quite cheap, that they're running very within themselves, and that there's room there for expansion and growth. So just to quickly recap, I know they're on the screen in front of you, but yeah, it's that debt not greater than 3 times the profits, the chart in a general upward trend, the share price rising over the last 12 months, has always made a profit in the last 10 years, the market cap less than 15 times the profits, pays a dividend and it rises year on year, the company has a 10-year history, have the directors bought into the company in the last 12 months, the share is a full share listed on the FTSE 350 and above. Do I understand what the company does, and is the P over E less than 20? Now guys, that's just my thoughts on how this works and how Share Bingo is going to go and what I'm going to do. If you've got any thoughts, any comments, leave them please down below. And if you're interested in what we're doing here, hit that subscribe button and smash that like button. Apparently it's for the algorithm, but hey, I don't know.